Okay, that's what I come up with in valuation. It is a very strong quality company. It has a fantastic growth trend. The only points where we lost, that was first of all safety, because it has a higher debt than 10%. Okay, this is the thing. So they lost some points there. Also the points on debt itself and the beta. But I already mentioned that beta, it's actually can be kind of assessed in different ways. So I presume that in current overpriced market, beta is good. Okay, I would actually add points there. But even without those points, 3 points lost here, the company still got 44, which is for us is an ideal company in order to invest. By the way, guys, if we take the whole market, about 30,000 companies, US market, small companies, over market, over counter market, only about 300 companies will pass this test. So imagine 1% of the whole market will pass this test. So when you think that it's easier to find companies like that, believe me, it's not. It's a lot of work involved in order to find this company. Out of all companies which I have in my watch list, I was trying for the last week to find a company, and I come up only with 2. And one of them is here, and another company moved up. So it's a moment. It's not a good like from trading perspective for this particular time. And I always mention whatever companies I show at a masterclass, I always put my money where my mouth is. So I put my money. So I actually already put money in this company. I already opened the position there. I actually done it twice. I already made some money on this. I opened the close position 2 weeks ago, and last week I opened the position here as well. And we're going to talk about in a few minutes again. Now, and that's from valuation point of view, and majority of you were right. The company is not undervalued in a very deep level. Okay, it is undervalued compared with the average, but it's not not on the level which we used to have companies previously. Now, if you see that in average P/E ratio was 15, okay, like if you take last 5 years, and we know that this is the fluctuation in price here. So, and what we do here for those who are new, we take the highest prices, we add them together. Okay, that's the number we have here, and then we and it's like average. What we add them together, divide by 5, and then we do the same thing with profit. We add the net profit, and then divide by 5. That's the average, and then what we see, that's the highest price, average price, and this is the lowest average price, and then this is the average earnings. So what we do, we just divide it, because this is actual earnings, and that's how much people paid. Okay, so we know that in a kind of difficult time, when some bad news come up, in average, people paid 15 times of their earnings. But when everything was rosy, fantastic, beautiful, good news about this company, people paid 26 times for the same company within the same year, right? And now we know that the company projections for the future is $10. Okay, they promise that they're going to make $10 in the next 3 to 5 years. That's where they're going to grow. And we already know that company, if they predict something, they're 100% right. Okay, so we can assume that sometime in the future, within the next 3 to 5 years, again, everything will be rosy, everything will be nice, and people are going to pay exactly the same amount of money as they paid in the best case scenario within the last 5 years. Okay, so which is 26 times. So we do 26 multiplied by 10, we get $261. So we can assume that sometimes in the future, in the average, it can be high, it can be a bit lower, the price will be at around $261 level. Now, if we look at the pessimistic part of the scenario, and we understand that the company in the past had 15 times of their earnings valuation. So we can, okay, sometimes in the future, probably some, sorry for language, shit happens. And the company valuation, like emotions about this company, projections from different analysts will push the price down. And in this case, we know, like historically, people paid 15 times of their earnings, okay, in average. So what we do, we take actual earnings, not the projected, because the company tells us they're going to make more money, but we take the actual earnings which we already have, and we know that this company is very sticky with earnings. They're not dropping. So we can tell us, okay, 15 times multiplied by current earnings is $102. Guys, do you see this number? It's very similar to what value line has. Now the question is it going to drop that low or not? Nobody knows. I cannot tell you, you cannot tell me, nobody in this world can tell you. Okay, maybe the guy with crystal ball only, right? But that's what we do. This is the kind of the valuation where the company can be within the next 3 to 5 years. So what we usually do, we kind of assess, okay, fine. It can be 30% of the time, like 1/3 of the time closer to the lower level, 1/3 of the time to the highest level, and 1/3 somewhere in the middle, okay? And that's how we distinguish this. So we take and divide it by 3 areas. And from 102 to 155, this is a buy area where we buy. 155 to 208, that's the valuation, that's the average valuation where the company going to be 30% of the time. And then from 208 to 261, that would be for us a sell level. The company would be overvalued there, definitely, and it is better to stay. So as we can see from these numbers, the company is undervalued, but not deeply undervalued. So it still can go much lower in price, okay? But the question is, will it go this year, next year, or when? Okay, we don't know. Can be called a margin of safety. Yes, correct. You understand that, guys, right? So, and in this particular case, what we do, we have to evaluate, is it going to go? So I always combine fundamental analysis with technical analysis, because I understand that a lot of people, they don't look at these numbers. They completely ignore them, right? A lot of technical analysis guys, they just trade. And when I combine this two level of knowledge, you kind of understand, okay, this is fundamental assessment, but then technical assessments also there. And I try to understand how technical guys think, and I know where selling when they are buying, okay? And by knowing this and combining these two knowledge together, you actually can become quite powerful on the market, right? Now, but definitely you understand this. Now, as I mentioned before, remember I told you tangible book value is negative here. So there are no assets here. Like, I mean, there are assets, but if you sell all these assets, I mean, tangible assets, like computer, tables, whatever, and then you pay all the debts, there is no money left. But remember, they have intangible assets as well, which they can sell, and this is a software, some patents and whatever, right? So they can do it. And earnings are going to be 25th of February. So we have, and by the way, if you go to TradingView, it's even March, they show 4th of March. It's not exact number, but somewhere in those range area, okay, that week. If you're short-term trader, you already can be in and out several times. If you're option trader, you can be in and out several times by that time. But if you're long-term investors, who knows, you might want to wait, okay, until they have this earnings, and to buy only after earnings, and then you have 3 months to research it more, all right, in this particular case. Now, this is from fundamental point of view. So the numbers, actually, I also, what I've done, I showed you the actual profit and loss statement, how it looks like. I took it from Interactive Broker, our broker, and the main reason I took it just to show you quarterly reports. And you can see that last quarterly report was $554 million in profits, and the same quarter year before it was 360. Okay, it shows us a growth, which is a good sign during this kind of uncertain times, right? And that's how the volatility of earnings. So we can see that every quarter is different. So this is the best quarter, okay, the last quarter, and we actually approaching this last quarter. So this is going to be, okay, people expecting that, all right, and then it drops down. So first, third quarter different in this particular case. Actually, a lot of people, value line is paid. Okay, so, okay, this is a question. Yes, value line is a paid source. But you can find a lot of unpaid sources. Of course, you have to know where to take them and how to analyze them, because there are reliable sources and there are not that reliable sources. And also, if you take two different sources, sometimes you can see discrepancies, and you have to understand who is right and who is wrong and where to go in order to check it. And by the way, all this information we're going to cover in our 2 to 3 month program. It depends on the amount of level you want to achieve during this program. We're going to cover everything, not only where to get this information, but how to analyze this information, okay, how to fill that spreadsheet and etc. So we're going to do this. It's again a bit further ahead. You can come to the next event and see. Now, this is again information about shareholders within this company, also important part. And we can see that, interesting enough, right? So institutional investors, they own only 15% of the company. But I already told you that only 15% company is on the market. And if you look here, Dell tracking stock, it's actually 500%. So if you don't know the structure of this business, you think, how come they can own 500% of the stocks? Like, I mean, if you only can have 100, right? And then you can see other companies, EMC Corporation, right? And Silver Lake Financial Management, how come they own more than amount of shares has to exist in reality. But then by understanding that those shareholders, they just own the majority of the business, and then only 15% of the business is actually sold to public on the market. Okay, and then you can see here inside the trading activities here. So this is like that. All right, guys, can you please put from 0 to 10 how you understand about the fundamental of the company? So I might miss some questions. Okay, great. Okay, numbers. Okay, so let's come to technical analysis. Also important. Actually, a lot of fundamental investors, they disregard technical analysis completely. And I met quite a lot of guys like that. And when we sit down and we look at their portfolio, and they wouldn't tell me at what price they purchased the stock, and they will actually open the platform, like we specially did it on technical analysis, where they purchased, and I would tell them, would I buy at that moment or not, and at what price I would buy, based on technical analysis, not on fundamentals. And practically every time you could buy cheaper, because usually even fundamentalists, they're affected by emotions in the market. They see the good stock, they hear the news, they analyze it. It is a good stock, they buy it, but usually they buy it on news, and usually it's too expensive at that particular moment. All right, so that's how the stock price moved within the last 12 years. So we can see it's opened around $40 level. Within next month, it's moved a couple months, it's moved to nearly $100 level, 120 even, and then dropped to 20. Okay, and you can see it's quite volatile company. In 2019, it went to $206, so it was the highest point. And during the pandemic last year, it's dropped to $83, I think. And now it's back to around $135. Okay, so this is the level. This is a monthly chart. So each candle represents 1 month. And this is a daily chart. So one candle represents 1 day. And we can see this is the fall which happened in March. Okay, and after that, we can see it went down with all these emotions. And if you go now and open any chart, practically all companies will have this fall, majority of them, because at that time the price was affected by emotions, more like fundamental, because people just didn't know what to expect from the future completely, because current pandemic is first time in history. Like, yes, we used to have all this maybe not pandemic, more like epidemic, right? In Europe, where people died a lot from different diseases, which now treatable, but this particular situation is actually first time in history. Nobody knew how market is going to affect that. Now, that's what I like. Look, it went to $156, and since that time, it's kind of going sideways. Yes, once it it dropped down here, but you can identify a couple levels, a few levels. First level is $134, 133.54. This is the bottom line. Another one a bit higher, it's $137, so it's about $4 higher. Then we can see the highest point here, 1, 2, 3, 4 times it's touched $156. And if you go for this highs, okay, this is around $146. Basically, when technical analysis traders, they trade, they see those levels and they trying to, let's say, buy here, sell here, buy here, sell here. When you know that, and you know this stock is fantastic and this stock is great, you kind of trying to understand, okay, what kind of theories they about technical analysis, okay? Some of them, they are level analysis. So you know that they buy when it get to the support level, which is a low point, and then bounce back and start moving up, that's where you buy. Because a lot of traders. And if you like this stock and you want to buy it, why wouldn't you? Okay, but you would buy only at that particular moment. So another look at trend analysis, okay? And the trend analysis, you can connect to the topest, let's say, highs here, and you can see they're kind of highs. Each high goes lower and lower and lower, and then I put a parallel line. Actually, I put 2 parallel lines, but interesting thing happened here, right? So we can see that majority of time it moving in a higher kind of line, right? So 2 lines, but sometimes it goes to a lower line. So at the moment, we're just bouncing from this middle level. So, and quite possible, right? Quite possible if all these traders who trade this trend, so they're going to buy now, and it might go back to the top of this trend. Okay, it's going to be lower or might be higher. So, okay, and if it breaks through, it might go all the way here. It might happen too. Okay, it's based on technical analysis. Now the question is, why would it go down? Okay, something has to happen with this specific company or general on the market in order to affect it. We know that the market is pretty high here. So tonight, what happens with the market? Do you know, guys, what might affect tonight the movement of the market down? So guys, for professional traders, investors, can you tell it? USA, yes, USA. Okay, Biden is tomorrow, right? Inauguration is tomorrow. But tonight, what actually happens that big banks, the earnings season starting. A lot of, like Netflix and a lot of big banks, they're reporting their earnings. Okay, and very often when big banks, they start reporting their earnings, and if their earnings short, so they make less money than they promised, they start falling in price, and it affects the whole market. Okay, this is today is quite, like this week generally is going to be important because a lot of big companies, they are going to follow. If you look even on Friday, how many companies reported their earnings, I think about 6, and tonight is probably around 20, 25 companies. All right. Okay, this is technical analysis of this specific company, and I don't know if you have a closer look. That's how it looks closer. And by the way, you see this level. So around 133, it's bounced once, 2, 3, 4, 5. It's not exactly from that level, but here and now again. So the question is, this is where we need a crystal ball. Right? Will it bounce from here and go all the way up, or will it break it through and go down? If you knew that, guys, we all would be like billionaires, right? We put $1 with a very leveraged product, right? And we'll be all billionaires within next year. But that's the $1 million question which we have to ask ourselves. And I usually ask the question, first of all, like that, but secondly, how am I protected? So yes, I told you already that I entered this position, I already opened the position, but the question is, what will I do if the share price keeps going down? This is a plan B, which you have to have before you open any position. Okay, are you willing to sit and wait until the company goes down, and then bounce back? If the fact that it bounced back or not, personally, I'm quite confident because I analyzed with you now 15 years of this company activities, and I can see the company is quite volatile, so I can expect that it can go down. we know that it can go down even to $102. Actually, last year, it went to $86, but look how quickly it bounced back. Of course, it's not very pleasant when you buy something and it keeps going down, especially for those who are just new in the market. But if you're quite a while on the market, and if you kind of have a mindset like Warren Buffett, it's quite okay. I remember I watched an interview of Carl Icahn. It's one of the biggest and sophisticated investors in the world, and I will remember this interview forever, because they asked him, how do you invest, how do you allocate your capital in a company when you decided to buy? And he's saying the next thing: if I decided to buy, for example, a company, and I think I might have about $500 million in this company, so $500 million in one company. He says, first, I put about, when I believe the price is right and low, I put $200 million in it. If the share price dropped down even more on certain levels, I would buy another $200 million of product. And if it goes even lower, I pay another $100 million, and that would be allocation for that specific company. I wasn't surprised the fact that he's going to average down. I was actually quite surprised that the person who has 40 years experience in the market, and he's considered one of the best investors in the world, he says that he expects, even if he already identified a good price, he expects that the price keeps going down. So by telling that, he kind of tells us that there is no way in the world you can know where the price is going to be. So that's why now we can predict the price that is going to bounce from here, but we cannot tell it for sure. And that's why, guys, when you hear somebody is telling you that, oh, this is the price you buy and it's 100% sure going to go up, run away. Okay, so be careful, because it doesn't happen. All right, guys, put from 0 to 10 how you understand it. Okay. Okay, great, fantastic. And now, of course, the question, which contradicts to what I said, where would you buy it? Okay, so for example, if you decide, if you like this company and you decided, okay, fine, I'm going to put some money in it, where would you buy it? Now, guys who trade options, before you start telling me I'm going to sell puts or whatever, calls, tell me first always the area where you enter the position and where you exit the position. This is the first step what you do. So always stock market, so where you're entering and where you exit. Then you already decide what kind of strategy you're using. Are you going to sell puts, or you're going to buy calls, or you're going to use all these different fancy spreads. But you have to decide first where you buy, where you sell. If you put it in the chat, I just check it, and then already I express my opinion. All right, if it is fine with you. Okay, Rohan 133.50, so at current price, entry 142 on break out with target 160 maximum. Okay, so it's somewhere here. 133, 148. Okay, until here. 130 and sell. Guys, the reason why I'm asking this, because a lot of people on the stock market, what they do, they're trying to rely on someone else's opinion. And it is wrong, in the sense that it is your money. You work hard for them. Okay, you save this money. And if you're going to listen to somebody and just doing what that person does, it's kind of eliminate all this comfort from the investing. If you analyze the company yourself, you made this decision yourself, it becomes much easier. You sleep well, believe me, because if you've done this decision and then you compare it with other decision, if your decision is correct, you sleep much, much better. And we are going to be sworn investors, sleep well at night investors, okay? And you only can do it if you learn how to make those decisions, okay? And during the masterclass, it's not that difficult, right? Because we've done all the steps, and for you, it's just to put the prices, and that's it. And it doesn't really matter if you're wrong or right, as long as you learn how to make this decision. That's why I'm asking you, okay? It's not that I want just to correct. Okay, 133. I will definitely wait for the earnings to finish. Okay, fantastic. 137, 150, 131. Okay, great. So fantastic. Today is a great group. Everyone knows everything.